It's that time of the day. Market update time. Let's get straight into it. Do not place a trade based on what you're seeing in this video today, because trading is risky and it can cause substantial financial loss. There are so many areas you need to become good at to become a good trader. Emotional mastery, chart reading, trading systems, money and trade management. So this video is just educational only to help you become a much better trader. All right, that time of the day, market update time. Okay, so let's have a quick look at what the markets have done. Now, yesterday I came out and I put my balls on the line when I said yesterday that this rally here, it may go a little bit higher, but I believe we're now starting to form a head and shoulder formation. And look what happened yesterday. Completely engulfed this bar and actually even closed lower on the Dow Jones. That is incredible. Now, look at that volume. Not a big volume, is it? The reason why is because I'm actually recording this literally like 15 minutes after the market closes. So the futures market's not even closed yet. So when this volume is finished here, like that's where it's closed right now, I'm expecting this volume to be up here somewhere when it's all done and settled. Okay? So that volume is likely to be a lot higher. This is where the market's turning around. So yesterday I said, okay, I believe this market's starting to form a head and shoulder formation. I don't believe this rally here is going to last like it tried here. And you can see the market started faltering through here again. That's what I said yesterday. And I actually said, you know what? This market could go up, but it could go down. But I'm not going to stand on the sidelines. I'm going to put my balls in line. I'm going to say, this is forming a head and shoulder. And I believe, and I'm still going to say this, I believe by the end of this month, we're going to be down here or even lower. Pretty big call, I know, but I've been saying this all month. In fact, I did a video back about a couple of weeks ago saying May is going to be a deadly month. And now it's starting to form. As we can see, we had this left shoulder here, this right shoulder here, head here, and now it's forming this right shoulder here. And I said, look at these lines through here. I said yesterday that both of these lines are actually coming in together. And we're actually coming down towards these lines. And as you can see, it stopped right there and rejected it. That's why I'm saying, guys, this market is a sucker for people that think this market's going to go up. And guess all that was yesterday. That was just the day where everyone, guess what? A lot of people that saw this up move here, and saw this up move here, and saw this up move here, and saw this up move here. Guess what they did? Oh my goodness! Well, it's going up for this. It's going up for all this time through here. So now I'm going to buy it through here. Makes sense? And then guess what? Boom! Down it goes. It actually and guess what? Now you have a lot more people getting into here because they're afraid they're going to miss out on the continued upward move. Then you did here, and here. Why? Because the majority of the people, let's draw a person here, and the majority of these people are followers, not leaders. You have like 80% of the population, or probably 90% of the population, are followers. They follow. Why? What does that mean? They wait for the market to move, and then they jump in. Then the market reverses and they jump out. That's the reason why most people don't make money in the markets, because they're followers. And then you have the 10% of the people, like me, who jumps in front of the crowd and say, oh, I'm not going to follow this crowd. This is where I'm going. And the 10% of the people, they're leaders. They lead. They don't follow the market. As Warren Buffett says, you buy when people are fearful. And you start selling when people are greedy. Guess what's happening up here? People are starting to get greedy. Oh my goodness, last time went up, I missed it here, missed it here. Look at this, here we go again. We're going to race to new highs. And what did I do? I did a video yesterday saying that, let me actually I'm going to do this on my side here, so I can just double check, so I can get my little thing right here. Alright, so I did a video yesterday called Market Update. Are we heading for new highs? Crash low still coming in May, I think. So I did that. That was the title of the video. That's exactly what I saw. And now you can see what's happening here on the Dow Jones. The Dow Jones is already starting to falter. And this is actually saying something here, guys. Last time we got this sort of action, we did see a crash low. Okay, and you can see the market's actually starting to falter, and now we're starting to create these lower peaks, lower troughs. We are heading down this month, next month, and new lows are coming. You watch, big crash is coming, guys. That's all I say. Oh wow. So we can see what happened on the Dow Jones there. Let's go to the S&P. This is the S&P. It's like, oh, look at that volume. Not much volume there, John. Yeah, well, guess what? When this volume's finished, it'll be up here somewhere, maybe even higher. This is because the market's actually just closed, and then it takes probably a good couple of hours, especially for my platform, to finalize the whole volume there. So I'm expecting a lot more selling volume coming in. Oh, it's just natural. Even this bar here was down here. Obviously when the market closed, and then it spikes up after market hours, because again, everything's been settled. It's finalizing the volume for the day, and then that's when the platform gets updated. But as you can see here too, guys, right? You can see that I even said yesterday. I said, look at this here, and I drew two lines. I drew two lines on this S&P as well too, and the Dow Jones. I said, look at this. We have this. If I draw this point up through here. So let me just bring up my trend lines tool. I said if I take this point up through there, and we hit this point here, and we hit this point here, this is where we are right now. Look at it, just reject. But then also, if you take the closing part, I also like to draw my trend lines on the closing bars. So you can see here, I'm going to draw it on that bar through there. So not the high, but where it actually closed. And I'm just going to connect it where it closed here and draw that down through there. And as you can see, I'm drawing that down. And where am I drawing that? I'm drawing it where the market closed, because they said the most important prices is where the market closes, right? Not where the high and low is. And as you can see, it couldn't break above there. It couldn't break above there, and it was all right there. So you can see both of these lines were coming right into this level through here, and that's what I was saying yesterday. This to me is forming a head and shoulder formation. And I believe this week it's likely to form this maybe head and shoulder formation. And then guess what's going to happen next week? Well, that's what I think anyway. That may not happen, but I'm saying that's what I'm saying. That's what I'm saying that's going to happen. Because guess what? I'm not a sidelines trader. I'm an actual trader. I get in there and I trade this market, and that's why. And that's what happens. You know, I'm in there and I'm trading. I'm not going to say, oh well, we'll see what happens. No. This market, this market to me is going down. Look at that rounding top. It's rounding top right now, and now we're likely to head down. And yesterday I also did a video. I said, look at the Nasdaq as well too. Nasdaq is rallying up. We had a decent volume Nasdaq, but I said yesterday, look, we're actually at this area of resistance. Last couple of times we got to this area of resistance, like here, and then here, and then here, and then here, and then you can see it bounced off there, and then they rejected there. Every time we got to that level, we rejected, right? Now look what's happened. We got a rejection. So down, down, down. Nasdaq, guys, has the most to fall, and I'll bring you up to the weekly charts in a minute. And I also brought up a chart yesterday saying, guys, look at the Russell. The Russell to me is looking weaker because it broke above these, and this support line here, once it was broken there, bounce there, bounce there, bounce there, bounce there, bounce there. Look at all those bounces. Once, twice, 3, 4, 5, 6, 7, 8, 9, 10. And then it also closed there 11 times, and then broke up. So this is likely to be an area of resistance, right? And you can see this area was resistance. It broke back up, and people are like, oh, this thing's racing up, and then the market drops over almost 1.5%, totally engulfing this up bar. Can you see how things are changing? It's no longer stair-stepping up. It's actually starting to stair-step down. This is the time, guys. This is the time that if you are long on stocks, that's supposed to be an arrow, by the way. If you are long on stocks, if you are bullish on stocks, this is the time you definitely need to be getting out. Because guess what? This here is coming. This here is coming this month. The crash is going to come. And we're going to see a big move in the markets this month. From now, where I'm recording this video, which is May the 12th, or it's actually May the 11th in America. So the May the 11th was this bar here. Through to the end of May, and even June is going to be big red down, big arrow down, down, down. Okay, so that's just what I think, and that's just what I think, and that's what the charts are telling me, and that's what I'm saying. This is what's going to happen. All right, so let me show the weekly charts just quickly. So this is the weekly chart. You can see here, weekly chart again. It actually about this weekly bar, it actually ran up, sort of rejected as well too, and now it started coming back down. Notice how that's exactly what happened last week. It ran up, rejected it, started coming back down and closed lower. Ran up, rejected it, come back down, And now guess what? We still have a couple more trading days. Down we should go in the markets. Bam, bam, bam. Down, down, down. Okay? So let's have a look at the Nasdaq weekly bar. Here we go. Ran up, rejected it. You can see this rejection through here. Rejection through there. We totally rejected it. So S&P, what's up with the S&P? Again, ran up, hit that area of resistance, and now it's actually breaking back down, and the same with the Dow Jones. Now, the Dow Jones is actually a lot weaker. Now, that's actually saying something. That's actually saying something, because I remember, guys, back here, and I was just like, oh my goodness, this is so cool. I remember back here in obviously December last year, I was doing videos, and I was noticing that just before the market cracked, the Dow Jones started becoming a lot weaker than all the other markets. And then the market fell off. I'm like, oh, I noticed that. I noticed the Dow Jones started getting a lot weaker, meaning it started creating some lower peaks, lower troughs. It started having bigger down days in the market. So I'm not saying that's happening right now. Where we actually, compared to the S&P, we're actually getting that bigger down day. Obviously on the other markets, like the S&P, we only had less than 1%. This one here was 1.2%, and the Nasdaq had a 1%, and also the Russell had a 1.26% as well too. So that tells me, guys, that when I remember that very, very clearly. When I was doing my analysis over here, I'm like, okay, cool. The S&P 500 is doing what it's doing. But then when I looked at the Dow around this time as well too, I noticed that the Dow was actually slightly or a lot weaker, and I was starting to get a lot more weakness in the Dow compared to the S&P. And then this started happening, and also this started happening through here. So, and now let me show you know what? Let me just show you what I'm talking about here. All right. So if we look at the S&P, right? The S&P ran up, and the S&P. Let me actually just get this line through here. So you can see the market ran down, came down, created a trough, created a low peak, created a high trough, created a higher peak, and then dropped down through there, right? So you can see this market actually created this higher peak, and then the market dropped off. And the market created, this market was creating step down, little higher peak, overall major low, and then the market dropped, okay? So just remember that there. Now if we go to the Dow Jones, what do we see on the Dow Jones? This is where I was noticing something. Look at this here. All right, now remember this period, okay? Before this pull down here in January, we actually had a higher low from the week and a higher high, a higher trough and a higher peak, then the drop. Okay, now remember what I said before, I noticed the Dow Jones has been a lot weaker. Now what do we see here? Now we actually see that the Dow Jones actually created a lower trough and a lower peak. Do you see what I'm saying there? So the S&P, which is basically following along really, really, really closely, almost identical what the Dow Jones 30 was doing, I started noticing this type of pattern here. I started noticing that the Dow Jones was actually weaker than the S&P. So the Dow Jones started to break away, and I really, 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 really noticed this. And now guess what's happening? The Dow Jones is already starting to get weaker on the daily charts than the S&P. That is the sign that I'm looking for, to see that this thing is starting to. That's the sign I'm looking for, to see if this thing is going to start moving down. Okay, so, all right, so guys, that's what I see in the markets. That's what I see on this on the Dow Jones as well too. You can see that's what's happening through there. Okay, so I hope you can see what I'm talking about here. And guys, when I actually learned this, I'll give you a quick little story here. Back in 2008, 2009, I was heavily trading the E-mini S&P 500, heavily trading it, and so I was trading the E-mini 500, and the way that I was trading is that if we had like a nice good up bar, nice good bullish up bar on the daily chart, say on the E-mini S&P 500, well then generally I was looking for a nice good buy signal. So I wait for a pullback, and I generally wait for a pullback into an area, some sort of area of support. And then I'd buy, and I'd try to hold on from like 8 to 10 points, and then I generally had like a 10-point stop. That was sort of the way I was trading. And I noticed time and time again that if I was trading the E-mini, okay, so I was trading the E-minis. So I was trading the E-mini S&P. So once I noticed, if I had the S&P, this E-mini S&P over here, if I had that at support, but the Dow Jones was not at support level, then this here was a very, very weak sign. Very weak sign. But I noticed, guys, that if I had that entry signal and the market broke down and the S&P 500 actually broke down to a support level, and then so did the Dow Jones, and that was at a support level, this at a support level, guess what? Now, this actually went from a very low probability to like a really high probability. In fact, this went from like a 50-50 win-loss ratio, maybe 60% win-loss ratio, to like an 80 to 90%. I had very, very little stop outs when I had that set up. And then guess what? It actually skyrocketed when I started adding things like the Russell and also the Nasdaq. And when I started getting the Nasdaq, when I started getting the S&P at support, the Dow Jones at support, the Russell at support, the Nasdaq at support, we're talking like a 90% plus setup. 90% plus setup. So, and this is where I started noticing, especially with the Dow Jones, like the Russell and Nasdaq, that added a bit more confirmation to when I was trading like that. But what was happening is that when I noticed the Dow Jones, was at support with the S&P, my success rate just skyrocketed and I made a lot more money. Now I did make money just trading the S&P 500 alone, but I was trading a lot less trades and I was making a lot more money by trading that sort of way. Now the reason why I say that is that's when I actually started noticing, when the S&P and the Dow Jones are doing the same thing, when they're both hitting these areas of resistance, that's when you have something powerful. And that's when I started really following very closely the identification or the identicals between the S&P and the Dow Jones. So if I bring up, let me bring up this chart here, and I know this is actually quite big. Let me actually bring this up here. Now what I've got here, guys, is I've just got 4 charts here. Okay, I've just got 4 charts, and what these 4 charts, this top chart here, let me just do this here. This top chart here is the Dow. This chart is the S&P, this chart here is the Nasdaq, this chart here is the Russell, okay? So I've just lined them all up so I can get a real good look at what's actually happening overall. And you can actually see that overall, you can see the S&P is actually starting to form that head and shoulder. The Dow Jones up here is actually forming that head and shoulder. And you can see this is actually a weaker bearish move as well too, creating that lower peak as well, and creating a lower peak here. And as you can see, right, even the Nasdaq, you could call this a left shoulder head, and this could be also a right shoulder with a lower low, very, very weak signal. And the same with the Russell, left shoulder head, this could be a right shoulder, and then down we go towards the lows. So I'm actually seeing there, guys. I'm seeing that the Dow Jones is starting to be a little bit more weaker than the S&P. And remember I said before, back here, what happened? It created a lower low, a lower peak, and a lower trough. This created a higher peak, high trough, and then the market came down. Once I started seeing that the Dow Jones was starting to lead the way a little bit compared to the S&P, that's when things started happening, and that's actually what I'm starting to see right now in the markets. Make sense? So that's what I'm seeing there, guys. Let's actually bring up the gold charts. So this is gold's to the right. Gold is at the top, guys. Gold is at the top here. Okay, and then obviously silver's down the bottom. GLD is at the top, SLV is down the bottom, and we're actually starting to see this move, this really, really big move. And if I bring up my trend lines, if I can show my trend lines here, bam. All right, so you can see what's happening here. The market's actually bouncing off. I said this might be a little bull flag, and we had a bit of support here, and it's actually starting to pull away already. And same with the Russell, same with the silver as well too. So I don't know. I don't know about silver. I'm not too happy getting into silver here. I'd like to see a bit more of a pullback in silver, but who knows? If we're getting ready for a crisis, if we're getting ready for a drop in the markets, then GLD and SLV may be the markets that actually starts to head up, and actually may start to see a lot more movement to the high side. So that's the daily charts. This here is the weekly charts. This is the weekly bar. And so you can see GLD to the top, SLV down the bottom, and you can see that what is actually happening is GLD is actually a lot more poised to actually run out than I think the silver is. But as I said before, guys, and this is something that I want you to understand too, that right now, if we are going through a crisis, then we're likely to see a spiking in silver and spiking in gold before a real big crash comes. Now, I believe I believe over the next month or two, May and June, we're likely to see the first the first good 20 or so percent of the move down. But when we're talking like the rest of the move down, we're talking like a good 60 to 80% on completion on the downside. You know, in the first move down, gold and silver spikes. And then on the last leg down, gold and silver goes down. Let me show you what I mean here. So if I bring up, you know what, let's actually do this. So I'm going to let me bring up this weekly chart here. And I'm just going to add another chart here. Okay, let me add another chart here. And I'm going to add a plot, and I'm going to add, let's just add the Dow Jones here. Okay, so the DJ, it's probably my lady saying she loves me. So we can see that. Let me actually bring this in. Let me actually just make this open, highlight, close again. One color. We'll go black just to make it easy. All right, cool. So we have the Dow Jones at the bottom there. Now let's actually squeeze this up as much as I can possible. All right, so I want to show you here. Last time we actually had this crash in 2008. In 2008, what actually happened with gold and silver? You can actually see here that gold actually went for a big run and silver went for a big run, but the markets were actually starting to create major low troughs and major low peaks, actually breaking past these major lows through here. So can you see that? So what I'm saying is that if the market's going to start breaking past these major lows through here and start to create this sort of action underneath, then I believe gold and silver are going to start doing this sort of action. And then if we start to get a real big breakdown, we may start to go into a deflation phase, and then the gold and silver will have a bit of a pullback. But we're not in bubble territory right now. We are not in bubble territory. Right now. So that's basically what I do see there, guys. That's exactly what I'm seeing right now. So I'm just getting my lady calling me right now, I think. So anyway, guys, that's it for me. I hope you enjoyed this market update. I hope you can see what I'm saying here. Guys, get ready, because May is going to be a terrible month, or it could be a good month if you're on the right side. Hey, it's John Howell here, and thanks so much for watching my video. You see, I'm putting out daily videos and education on helping you learning the art of successful trading. So click on the subscribe button to keep up to date with every video I do. Also, check out my story video, $250,000 in debt, cancer, overweight, family passing away, lived on the streets, and more, and how I overcome it and now thriving through my life. This is here to motivate you, so click on that image to watch my video. And lastly, if you're struggling with your trading, then you need to see my latest webinar where I'm sharing with you an amazing strategy that allows you to generate an income without getting the direction right. So click on that image on this page to register for my next free webinar. This is John Howell here. Remember, success can be yours if you go claim it. So step up, take massive action, and face your fears today.